Hey everyone, today I'm diving into a hot topic that's got investors buzzing. Palantir Technologies is joining the S&P 500. If you're an investor or just curious about the stock market, this one's for you. So what's the big deal about the S&P 500? Well, it's an index that tracks the performance of 500 of the largest companies in the US by market value. It's often considered the best gauge of the overall US stock market, and guess what? Palantir is set to join this elite group on Monday, September 23rd, as part of the index's quarterly rebalancing. Alongside Palantir, Dell Technologies and Erie Indemnity will also be joining the S&P 500, replacing Etsy, American Airlines, and Bio-Rad Laboratories. Palantir has already seen a massive 124% surge in its stock price over the past year, largely driven by the excitement around artificial intelligence. And history suggests that stocks can often soar after being included in the S&P 500. Let's break down the numbers. Since 2019, 93 companies have been added to the S&P 500. Among those, the average return in the first 12 months was 12%, with a median return of 10%. Going further back to 2014, the average return bumps up slightly to 13%, with a median of 12%. So Palantir could be looking at double-digit returns in the next year. But hold on, it's not all sunshine and rainbows. While joining the S&P 500 gets you more visibility and can attract more investors, it doesn't change fundamental financial metrics like revenue and earnings. A study by the Federal Reserve Bank of New York in 2011 concluded that index inclusion has no permanent effect on value. So whether Palantir's stock goes up or down will still depend on the company's actual financial performance. Now let's talk about what makes Palantir so special. They specialize in data analytics with their platforms, Foundry and Gothic. These platforms help businesses collect data, develop machine learning models, and integrate those models into real-world decision-making processes. Their big differentiator is something called the Palantir ontology, which connects data and models to improve business outcomes. Last year, Palantir launched the Artificial Intelligence Platform, or IIP, which adds support for large language models and generative AI to their existing platforms. They even introduced boot camps to help customers develop relevant use cases within just 5 days. In August, Forrester Research named Palantir a leader in AI and machine learning platforms, giving them the highest score for their current product offering. And their financials, Palantir reported a 27% increase in sales and an 80% jump in non-GAAP earnings in the second quarter. CEO Alex Karp mentioned an unbridled demand for their software in his shareholder letter. But here's the kicker. Wall Street expects Palantir's adjusted earnings to grow at 22% annually through 2025. However, with a current valuation of 106 times adjusted earnings, it's considered very expensive. Many analysts have a median 12-month price target of $28 per share, which implies an 18% downside from its current price of $34. So before you rush to invest $1,000 in Palantir, consider this. The Motley Fool Stock Advisor team identified their top 10 stocks for investors to buy now, and Palantir wasn't one of them. Imagine if you'd invested in Nvidia back in 2005 when it made their list. You'd have over $716,000 today from just a $1,000 investment. If you're looking for guidance on building a portfolio, regular updates from analysts, and top stock picks, check out Stock Advisor. And remember, investing is about making informed decisions. Alright folks, that's a wrap on Palantir's big move to the S&P 500. If you enjoyed this video, hit that like button, subscribe, and let me know your thoughts in the comments. Thanks for watching, and I'll see you in the next one.